This is the Internet Broadcasting Network at ibnetwork.us.
Thanks for tuning in to Dad CFO, where we talk about those things that affect our financial lives every day. Real life application of some good old fashioned truths. We're talking real dads with real issues. So sit down, buckle up, and enjoy the ride. And if you want to be interactive with the show, you can tweet at us at Dad CFO, or you can also email the show, dadcfo at ibnetwork.us. That's dadcfo at network.us. Hey, happy Tuesday, everybody. Rick Stevens back with you here at Dad CFO. Thanks for tuning in this week. Hey, just like each week, we actually have to go through all the legal stuff at the beginning. So, Rick Stevens, that is me, is a financial advisor offering securities and investment advisory services through Waddell & Reed, Inc., a broker-dealer, member of FINRA and SIPC, and a federally registered investment advisor. Insurance products are offered through insurance companies with which Waddell & Reed has sales arrangements. The information presented on this show is solely for information purposes and is not to be construed as an offer to sell or the solicitation of an offer to buy any financial product or service mentioned. Waddell & Reed does not offer tax or legal advice. Please consult with a professional prior to making any financial decisions. Any opinions expressed are those of Rick Stevens, again, that would be me, and may not be the opinions of Waddell & Reed. The information is subject to change based on market and other conditions. For more detailed information regarding any of the topics we talk about on today's show, give me a call, 719-590-1871. My direct extension is 115. Would love to sit down and chat with you. So welcome back this week. We're talking this week on our Open about teaching our kids about money. You know, one of the greatest gifts that we can actually give our children is the ability to handle money well. And in teaching our kids to be stewards of those resources, we as parents, we must be intentional in what we're doing. You know, our kids are going to learn from both what they see and from what they hear. And in fact, more often than not, if what they see is actually different from what they hear, they're actually going to learn that it's okay to talk about something one way, but to actually live it out differently. And the same is going to be true regardless of whether we're talking to them about what to eat, how to drive. It's the exact same thing when it comes to teaching them about handling money. So first and foremost, it's actually imperative. It's imperative on our part to make sure that our words and our actions align. Because if our kids hear us talk about the need to save money, but they see us borrow for everything that we want, then there's a pretty good chance that they're going to grow up to be borrowers instead of savers. You know, I actually heard this description of the generations past that came down. And you talk about the greatest generation, right? That generation that fought 2 world wars. And the greatest generation was looked at as a generation of savers. These were the folks who went through the Great Depression. These were the folks who knew where every single penny was that they had. But from that generation who saved everything came the baby boomers. And the baby boomers are the generation of the spenders. And from that generation of baby boomer spenders, we get my generation, Gen X. We are the generation of borrowers. And what have we as a generation of borrowers as a whole taught our kids? Well, those millennials, that generation that has followed Gen X, they are a generation of debtors. So if what our kids are seeing is something different from what we're talking about, more likely than not, they're actually going to come up doing the same things we've done and on an even larger scale. So what we have to do is we have to make sure that we are walking the walk that matches what we say, right? When you choose to live a lifestyle that is countercultural, that lifestyle that plans for those future expenses, that saves toward those, your kids are going to grow up believing that countercultural is actually normal, that it's a real way to live. And what we're teaching our kids in that situation is that the concept of delayed gratification is absolutely worth the wait. We're teaching them that that little bit of sacrifice right now, taking today's dollars, putting those things away for the future, that it's all going to be worth it. But we can't teach them this if we're not actually doing it. See, if all we do is just talk about it and we don't live it, our kids aren't going to learn. And in the long run, more is actually learned by our kids from what they see us doing than by what they hear us saying, right? Because our actions really do speak louder than our words. So that's that first piece. We've got to make sure that those words and actions align. Number 2 along there is if we want our kids to learn how to handle money, here's a little secret. They actually have to have money to handle. In my house, it works like this. 4 of my 6, they've got various chores that they can do, and they can earn money by doing them. For my 5-year-old, she's the towel and washcloth folder. And every time she folds towels and washcloths, she earns a quarter. She earns 25 cents. My 8-year-old, we're getting to the fall part of the year where we've got sticks, we've got some leaves. What she gets to do is she actually picks up the sticks from the yard. She sweeps off our deck. Every time she does it, 50 cents. My 11-year-old gets up to $5 every week. She watches her 3-year-old sister, gives her a bath, gets her ready for bed, things along those lines. My 14-year-old, he's the one who earns up to $10 each week because he's actually doing some of those outdoor chores that either I, A, don't have the time, or B, would just much rather pay somebody else to do. In particular, raking leaves, doing some of the mowing, doing some of the trimming. I probably don't have to convince a lot of you that trimming around a fence is just not much fun. But you know what? As a 14-year-old, when you can earn money doing that, he's really happy. So my kids have the opportunity to earn. From there, each of them knows what my wife and I expect them to do with that money that they earn. Every last one of them knows that a portion is going to be given, a portion is used for some long-term savings, and a portion of it can actually then get spent. And for each of our kids, the proportions in that differ as to how much is saved long-term versus how much is able to be spent. We actually use the same portion for every last one of them on the give side, because those are the things that we want to teach them along the line. But even though those proportions are different, the concepts are absolutely the same. They're learning, number 1, it's good to be a giver. They're learning it's important to put that money away for that future use, that long-term goal. And they're also learning about setting goals, both on the long and the short side, and that it's okay to actually enjoy using that money to purchase those things that you need or want. So kind of running through that vein, I've got a little short story for you here. A couple of weeks ago, my oldest, my 14-year-old, he needed new shoes, right? Because he's actually at that age where I swear to you, this kid's feet are growing so fast that if I actually put a stop motion camera on there for a day, you could see the growth happen, right? We've bought shoes recently that, because I'm the guy who goes, well, we'll just get him a little bit bigger than he needs. We've bought those recently, and he's already outgrown them. So my wife takes him to get a new pair of shoes, and they spend some time. They're actually out looking out, trying on some various brands, various styles, and he settles on a pair that he likes. They buy it. They come home. When he gets home, I say, "Hey, Chief, how about those shoes? Why'd you pick those out?" And the answer that he gave actually stunned me. He said, "Well, I actually liked the black pair better, but they were $10 more expensive, and I didn't think Mom should just spend the extra $10 for another pair of shoes, just because they were a different color." And And I'm willing to bet that if you had a video camera on me at that point in time, you probably could have seen my jaw physically drop. I mean, here he is. He's 14 years old, and he's worried about whether or not mom should spend the extra $10 on a pair of shoes just because he liked that color better. Now, I don't know about you, but even in all my years of teaching, I don't know a lot of 14-year-olds that would make their decision on the color of shoe based on it's going to save mom $10, right? He wasn't worried, in fact, about the shoes. And I knew at that point that discipline that we have worked with of giving, of saving, of spending, that was getting across just from that simple statement, right? He truly understood. He was actually worried about the price, even though it wasn't his money that was getting spent. So what leads us here is that he's actually seen both his mom and he's seen me go through countless times, right? When we decided to save money on something by not buying that higher priced item simply because it was a particular style that we may have liked better. While we're deciding between two things, we've looked at it, we've tried to go, okay, they're both functional. It's a matter of style. Well, cost weighs out in my house over style. And while neither one of us has necessarily pointed those out as those teaching moments, he's actually been paying attention. He's watching. He's learning. It's amazing to me that even in those indirect ways, he understood that it's good to have that new pair of shoes. The other ones are too small. They're tight. It's good to have that new pair of shoes, but it also matters how much money is spent on it. So that's point 2, right? Letting our kids actually handle those dollars, actually make some decisions in there. Final point with this. In teaching our kids about money, we have to be willing to let them make mistakes on that small scale, to let them learn from those small mistakes. Because I want you to think about this. It's a lot better if our kids blow through the $5 they got from grandma for their birthday and they wish they had waited and saved that money. It's a lot better to do that with those $5 now than when they're out there and they've worked their first 15 or 20 hour a week job and blow through a couple $100. Or even beyond that, they're out of college and they have that first career and they blow through a couple of $1,000. A $5 lesson for that child at 10, at 8, 15 is a lot better lesson for them to learn, especially when at this point in time they don't have those bills, right? They're not out there living on their own. That $5 mistake now is worth a great deal in the future. So if we can help our kids grasp that concept of delayed gratification, right? Of waiting on whatever it is when they're 8 or 10, 15, whatever it is, it's a lesson that they're likely to carry with them throughout life. And at those ages, again, it's a much cheaper lesson for them to learn. Now, my 5-year-old actually learned that lesson the hard way. She had done some chores, had a lot of quarters that she earned that week. Apparently, it was a rough laundry week at the Stevens house at that point in time. A lot of towels, a lot of washcloths. So she's got several quarters, and she's playing with some of her friends one day, and she decided she was going to share those quarters that she had in her spend container. My kids each have a different container. They each have 3 containers, one for give, one for save, one for spend. So she was going to share the quarters in the spend. So she gave each of her quarters to her friends. She did have a couple left over that were in the give container she didn't get into because we've taught her well. But each of her friends got quarters. And a couple of days later, she actually wanted to buy a pack of gum. And I said, "Mia, do you have your spending money?" And she looked at me with these sad, sad eyes and said, No, I don't. I said, well, Mia, what happened to your quarters? She said, Dad, I gave them to my friends when we were playing. Now, you might call me cruel, but I did not buy her the pack of gum, because it's much better for her to learn that 5-year-old lesson of I had spending money and I was frivolous with it, right? Now, obviously, the 5-year-old doesn't understand the word frivolous, but if you have one, that would be awesome because that child's a genius. But she's understanding, she's learning that if you give all your money to all your friends, when it comes time to spend that money on something, you're not going to be able to use it. And again, it's better for that 5-year-old to learn that lesson with 4 or 5 quarters than for that 25-year-old to have to deal with that lesson with $4,000. I will guarantee you my 5-year-old is not going to take the quarters out to play with anymore. So that's a little bit this morning here on teaching our kids how to handle that money. You know, it's never actually too early to teach your kids about money. Those young ones, they can understand that, hey, when I do a job, when I work, I can get paid. And the way we do that is to actually pay them when they're doing the work. My older kids, they get paid at the end of the week. They actually keep a chart of what they've been doing, and they get paid at the end of the week. My youngers, they actually get paid as soon as they are done with whatever those chores are. So they understand that concept that, hey, look, I get paid because I did the work. And when we teach our kids about handling that money at that early age, right, we are being very intentional about it. And quite frankly, that is the absolute key as we go forward with our kids. In order to teach our kids about money, intentionality is a must. Right? That's one of the things we started out with. One of those greatest gifts that we can give our kids is that ability to handle their money well. If we want our kids to be those stewards, to take care of those resources, we've got to be intentional, right? We absolutely have to be intentional about how we do it. And it's just like anything else, right? Anything else that we do as parents. Number one, we have to have a plan for what we're doing. And then number two, we've got to stick to that plan. Yes, we're going to make those changes as they're necessary. We might decide whether those natural consequences are a little too difficult for them to understand from time to time. As parents, that's our job, is to make sure that we're teaching our kids the right things when they're ready to learn them. But first and foremost, it is vitally important that we have that plan in place. Because quite frankly, if we don't intentionally teach our kids about how to handle their finances, there is absolutely no telling what those unintentional things they're going to learn on their own. It might be purely something that they've picked up just by watching us. It might be something they've picked up from someone else along the way. But there's absolutely no telling what those unintentional things are that they'll learn on their own. Finish up here with the legal piece. Rick Stevens, again, that's me, financial advisor offering securities and investment advisory services through Waddell & Reed, Inc., a broker-dealer, member of FINRA and SIPC, and a federally registered investment advisor. Insurance products are offered through insurance companies with which Waddell & Reed has sales arrangements. The information presented on this show is solely for information purposes and is not to be construed as an offer to sell or the solicitation, that's a big word, of an offer to buy any financial product or service mentioned. Waddell & Reed does not offer tax or legal advice. Please consult with a professional prior to making any financial decisions. Those opinions expressed are those of me, Rick Stevens, and may not be the opinions of Waddell & Reed. The information itself is subject to change based on market and other conditions. For more detailed information regarding anything we've talked about on today's show, please give me a call, 719-590-1871. You are listening to Dad CFO on the IB Network. Remember, if you have a question that you'd like to have answered on air, go ahead and tweet at us at DadCFO or email us, dadcfo@ibnetwork.us. We'll be right back.
RE/MAX Realtor, Colleen Allen. Colleen Allen is a professional realtor that not only cares about helping you sell your home or helping you find your dream home, she also cares about your family and your time. When you need an ally in real estate, call Colleen Allen at 719-651-7707. That's 719-651-7707. Colleen Allen, your RE/MAX ally in real estate. If you're the type of person who loves serving and helping others and is looking for financial independence, a career in massage therapy might be right for you. Massage therapy is a highly respected and enlightened practice that eases stress, relieves fatigue, soothes the aches and pains of injury and tension, and promotes overall wellness. Explore the ways that a career in massage therapy might be right for you. Collinson Massage School. Call today, 719-310-9297. That's 719-310-9297.
It gives clarity to problem solving. It increases production and focus on the job. It alleviates sleepless and restless nights and fends off stress and tension headaches. No, it's not the latest energy drink or health supplement. It's Legal Shield. Get peace of mind every day, every night, now and forever. Legal Shield. Get it.
To find out more about Legal Shield and how it can protect your family and your business, call Andrea at area code 719-243-3174. That's area code 719-243-3174. Legal Shield.
Rick Stevens with you, Dad CFO, and we actually have a guest with us today, Ethan Rector is with us. He's a dad, just like many of you are out there. He's a husband, father of two, soon to be three.
That's correct.
And he is also an estate attorney here in Colorado Springs with the law office of Medlow Blay. So, Ethan, welcome. Welcome to the show today.
Thank you very much, Rick. I appreciate the invitation and get a chance not only to talk a little bit about how finances fit in my family, but to pick your brain a little bit as well here on the air.
Well, good. Feel free to pick the brain all you want. So first, let's start off with this. Tell us a little bit about your family itself. What are those unique characteristics in your family?
Well, we do have a few unique characteristics. There's obviously my wife and I. My wife is a nurse, and so we both have pretty crazy schedules and different ways of getting paid. I'm a commission-based employee currently. My wife, on the other hand, earns a salary. So that's something that we have to take into account on a monthly, yearly basis as we do our finances. In addition, we have children who are pretty far apart in age. My oldest daughter, Kaylee, she is a fifth grader here in Colorado Springs. She is my adopted daughter. She was my wife's through a previous relationship. But the difference between her and my current youngest daughter is about 5.5 years of age. So we've got that disconnect where we don't necessarily have kids who can play with each other all of the time. And so there's different needs, obviously, when you have that huge gap
Absolutely,
in ages.
yeah.
And then, of course, my youngest daughter, Samantha, who is 4, she has special needs. She is autistic. So that brings yet another piece into the equation as to how we're going to handle her needs and also handle the needs of my oldest daughter as well. And then, of course, we're adding to the equation here in just a couple of weeks. We're expecting a third. Don't know yet if it's a boy or a girl. We're a little old-fashioned. We're going to wait for the day of and find out. I've got 2 daughters. You can probably guess what I'm hoping for, but really, it's just a matter of having a healthy child. That's the most important thing.
Absolutely. As a dad whose firstborn was his son and his next 4 were daughters, I understand fully what that looks like. You've got some unique challenges here, not only with you being that commission based and your wife being salaried, but even with the kids. What are a little bit you can tell us about some of those things you do as a family to be financially savvy?
Well, there are some of the basics that I think every family has to cover. My wife and I do set a budget. We try to stick to it as much as possible. We look at what the set costs are, and we know that we've got to at least cover those on a month-to-month basis. It's interesting because we can always count on pretty much the same amount my wife bringing in on a monthly basis, but a lot of times what we're able to do, how much we're able to save, to put away is going to depend on how well I do on a month-to-month basis. Right. But we do set a budget, and we try to set it based on the minimum that I can probably expect to make on a monthly basis. And then we look at the rest as kind of a bonus that we can save to put away for the kids, for future expenses. And then obviously for, as you mentioned in your previous segment, you got to have some that you can go out and spend a little bit, take family vacations, those sorts of things. So we have to take that into account. Like most families, we have to have an emergency fund set aside.
Mm-hmm,
and that's
definitely.
Yeah. And it's especially important in our situation where, if my wife were to some reason lose her job, that would be have a huge impact on our family, because she is the consistent same check coming in every couple of weeks employee in the family. If for some reason she was to stop working, all of a sudden we're depending entirely on my commission at that point in time until she found other work. And so that's something that we have to have a sizable emergency fund set aside just to make sure that if something like that were to happen, that we have enough to cover us. And I know that the months or the amount that you should save, there's different thoughts on that, whether it's 3 months, 4 months, 6 months, a year. We try to save a minimum of 4 months. It's something that we have to do. Avoiding unnecessary debts. We've pretty much set it in stone that we're not taking on any long-term credit card debt. We put most of our payments on credit cards, but then we turn around and pay them off at the end of the month, because if the credit card's going to give us free incentives like cash back or mileage on an airplane flight, or we actually use the one from our insurance company because they give us money off of our premiums on our insurance.
Awesome.
And we know those are set costs. So we're actually reducing our set costs by doing that. We're able to use that. And then it's tackling the long-term debt little by little, because I think, especially as a young family, a lot of families have that long-term debt, especially with student loan debt these days. And so it's a matter of looking at our mortgage. Do we want to pay a little bit extra towards that every month? And then how much more do we want to put towards paying off student loan debt?
Yeah, well, I will say that as a guy who also lives that, I work on the commission side of life. The answer to how much you need in the emergency fund is whatever mama is happy with. So my wife says we need 6 months. Okay, we've got 6 months. So if at some point she goes, I'd rather have a year, we will have a year. It's what she is comfortable with in our house. As you guys work through this, as you work through these things as a family, right? What are some of those things that you really find rewarding as you are working through those financial decisions?
Well, it's setting goals. I think it's important to set goals, to say this is what we want in an emergency fund. This is how we're going to work towards it, and then achieving that goal is very important. There's a certain satisfaction in accomplishing that goal, because it can seem very daunting. But if you take the time to tackle it, you're disciplined with your finances, and that's the most important thing. There's satisfaction in accomplishing that, but there's also side benefits as well. In any marital relationship, and I'm sure many of our listeners out here can agree with it, perhaps the number one stress is finances.
Mm-hmm.
And if you're both on the same page and you're both tackling your goals together with one consistent mindset, it's going to release some of the stress on your marriage. And that in turn will actually give you improved health as well. Because when your marriage is struggling because you have financial issues, that's going to impact your actual physical health. And I know that there's medical studies out there that prove that.
Yeah, absolutely. You know, there are many different things. In fact, if you kind of look at sort of the reasonings that are given in that world of divorce, number one, which happens about 70% of the time in divorce, it's arguments about finances. And yeah, you're absolutely right. There's so many benefits on that marital side. You know, the name of the show is Dad CFO. CFO is that Chief Financial Officer, so it's about Dad being the Chief Financial Officer in the family. And I want to ask you this. As a dad, what do you find to be the most challenging about handling your family's finances?
Well, I think every family has the bookkeeper, and I'm actually the bookkeeper in our family. The most difficult thing I would say is when you get that emotional plea, being able to hold back and not splurge. When you feel like you haven't done something for your spouse in a long time and you'd like to splurge on something for them that will make them happy. Being disciplined enough to realize that the most important thing you can do is find ways to spend more time with your spouse, rather than feel like you have to give them a new piece of jewelry or buy them a new car. That time, I think, is going to be more rewarding in the long run. And it's the same thing for children. People think that they can just go out and spend money to buy their kids more things to keep them distracted. But what I find is what my children really desire, and this is especially true in my family, where my wife and I devote so much time to our youngest daughter and her special needs that sometimes my oldest daughter will feel neglected at times through no intention of ourselves. But it's the importance of making sure we set aside that time, that 20 to 30 minutes a day, just to say, how was your day? How are things going with you? Is there anything you'd like to do? Do we want to play a game of chess? Do we want to put a puzzle together? Anything that we can do to devote that time there is important. Although, like I said, the struggling part though is that at times you feel like there is no time. And you think the easiest solution is to go out and splurge, but that might end up hurting you more in the long run when you're trying to set long-term goals for finances.
Absolutely. Absolutely. You know, as a dad of daughters, I actually have kind of adjusted my schedule a bit so that we actually, my girls and I, we get one-on-one dates each month. I have one date with the girl each month, and we do it on our Sunday afternoons. So, and they each one know when it's their Sunday to be with Dad, and it's a really awesome piece there. Well, let's look at that marital relationship piece, right? Communication is huge in building and helping to grow the relationship. How do you and your wife communicate with one another about the finances?
Well, I think like most couples, we could always do better when it comes down to that. I think it's important for one person to be the bookkeeper in the family. I happen to just be the bookkeeper in the family. I'm a very numbers-based person. If you've got two people trying to add up all the bills separately and pay all the bills separately, there can be issues there. So you have to have one person be set aside to be the person to take care of all of the weekly to monthly bills that are put in place, that are set. Of course, that does require a level of trust. And a lot of times in the struggling marital relationships out there, there is that lack of trust. And I know that they say if you lose that trust, it's very, very hard to win back. I think it's important if there is a lack of trust, no matter how well intentioned you are going in and tackling financial goals, it may be for naught unless you get the appropriate counseling in place to try to tackle things long term, build that trust back up. But that's important on our end. We always try to address upcoming expenses, so one of us isn't caught off guard when we find that there's a couple $1,000s less in the bank account, for example, than we might have expected. So those sorts of things. We're preparing obviously to have our third child, and my wife has been very straightforward with me coming up to me and going, okay, we have these additional hospital bills and paying the doctors, and so you're going to see these deductions, so don't be surprised by that when you're doing the bookkeeping, I guess you could say, in the household. So that's very important. We periodically review our set costs as well. One of the things we decided a few years ago when we looked at things and what's really important, the wants versus the needs, was that we didn't need cable television. Mm-hmm. We just looked at it as we were paying a lot of money for the 2 or 3 stations or the 2 or 3 programs that we like to watch. And so that's one of the things that we actually cut out of our budget. But it was based on a periodic review. We could save $50 to $100 a month and put it towards more important things on our end. And so we were able to cut that out of the budget. So I think it's important to periodically review things and really assess what the needs are versus the wants, because a lot of times in our heads, we begin to think that the things that we want are actually needs, and they're not.
Absolutely. Absolutely. Yeah, that comes up a lot. You know, I fall into that no cable TV category. When my wife and I moved out here to the Springs in 2007, one of the things we wanted to do was to make life simpler, and one of the things we did was we got rid of cable. And as a guy who is a sports junkie, right, completely, totally, 100% addicted, and I can say that word out loud, addicted to the world of sports, giving up my ESPN was the hardest thing I ever had to do. But here we are almost 8 years later, and I don't miss it anymore.
And that's what I found as well. I don't miss some of the things that I have given up. I've learned to live without them, and I really realized that it's not that important.
Yeah, absolutely. So let me ask you this. I know you are a professional in that financial realm of life as an estate attorney. Who are some of those professionals that you actually seek out counsel from in your financial world?
Well, I think the number one thing for us is, for my wife and I, is to have a financial advisor, because we can't know it all. There's a lot of people who try, and some people are good at this, and I'm not slamming them in any way. Some people are very good at figuring out how all the pieces fit together, but it's on a day-to-day basis, it's tough enough making sure the bills are paid, the kids are taken care of, you're planning long-term vacations, all of those sorts of things. It's nice to have somebody who's taking a look at the big picture for you, that financial advisor, making sure all the risks of daily living are being taken care of, making sure that you're saving for the long term, all of those sorts of things. So we do rely on a financial advisor. We rely on an accountant as well. We don't do our taxes ourselves just because, I wouldn't want to know it all in the case of taxes. I'm as an estate attorney, I deal with taxes on the income side and the estate side, but I know just enough to be dangerous. Let's put it that way. I don't want to know how to do everything. And so we do rely on an accountant, especially because of the work-based benefits that a lot of people have out there. You have to kind of weigh those versus getting the private benefits on the side and what's best from a tax-based way of looking at things. As an attorney myself, I do all of my own estate planning, I guess you could say, for my family. But I think it's important to have, if you have a business, to have somebody who can help you out on the business side of things as an attorney, and having an estate attorney as well, I think, is important, because you need to plan for the what-if scenario. And so I think it's important to have somebody who can set up a plan for you. I look at when I talk to my own clients, I always tell them, the documents are just the tool that implements the plan. You're getting the plan. That's what I'm setting up for you based on the knowledge that I've acquired in my time as an attorney. And then finally, a good insurance agent is important as well. You'd be surprised how many people out there are underinsured when it comes to their home, are underinsured if they're renting. My wife and I were victims of the Waldo Canyon fire a couple of years ago out here, and we found out we were underinsured when it came to our rental insurance on the house we were renting. And it wouldn't seem like that's something that would come and strike you, but it did in our case. And what I've learned is it's very important to make sure that all of the I's are dotted, the T's are crossed when it comes to that. Make sure you have enough coverage on that end. And then we also have an umbrella insurance policy as well. Working with our insurance agent, we figured how much we'd need to cover ourselves on that end. So all of those pieces are in place.
Awesome. Well, before we hit the next break here, I've got to ask you this. What is that one piece of advice that you would give a husband or a dad who may be struggling in their financial lives right now?
Well, I guess it's three parts, and one of them I already mentioned. You need to know your needs versus your wants and really be honest with yourself about those. Make sure the needs are covered first, and know how to differentiate between the two. Don't procrastinate, because the longer you push it off, the more time it's going to take to catch up, especially in getting your financial house in order. And the third thing is don't feel like you have to do it alone. There are people out there to help you. Rely on them. Find somebody that you can trust.
Awesome, Ethan. Well, as we come back from our break here in a little bit, we're going to actually turn the tables, and Ethan is going to ask me some questions. So, again, got to read that disclosure before we head out. Rick Stevens, financial advisor, offers securities and investment advisory services through Waddell & Reed, Inc., a broker-dealer member of FINRA and SIPC, and a federally registered investment advisor. Insurance products are offered through insurance companies with which Waddell & Reed has sales arrangements. The information presented on this show is solely for information purposes and is not to be construed as an offer to sell or the solicitation of an offer to buy any financial product or service mentioned. Waddell & Reed does not offer tax or legal advice. Please consult with a professional prior to making any financial decisions. Any opinions expressed are those of Rick Stevens, me, and may not be the opinions of Waddell & Reed. The information is subject to change based on market and other conditions. For more detailed information regarding any of the topics discussed on today's show, please give me a call, 719-590-1871, extension 115. Stay tuned. We will be right back. You are listening to Dad CFO on the IB Network. Remember, if you have a question that you'd like to have answered on air, go ahead and tweet at us at Dad CFO or email us, dadcfo@ibnetwork.us. We'll be right back. Struggling with your family's financial situation? Is the word budget a dirty word in your household? Have you always looked for a way to put money away for the future, but never really known how to do it? Then join us Tuesdays at 10 and 4 on TuneIn by searching at the IB Network, or find us online at ibnetwork.us. Dad CFO, where our goal is to help you put some good old-fashioned truths into practice. Real dads with real stories. We talk about those things that really matter and how to lead our families financially. We're looking forward to hearing from you as you hear from us.
Warmth and comfort. That's what you expect your heating system to provide. And that's what you can also expect when you call Harris Heating and Cooling. Harris Heating and Cooling makes you feel comfortable in your environment, whether it's residential or commercial, and they take care of repairs in a snap. Now, Harris Heating and Cooling is a family business, and they treat you like family. That means honest answers and affordable service. Call 719-203-5479 for a free no-obligation estimate and use your coupon from our flyer for even more savings. So when your furnace needs help, make sure your first call is to Harris Heating and Cooling. 719-203-5479. That's 203-5479. Harris Heating and Cooling.
Paperback writer.
Don't miss Beatles in the Morning with Tim, weekday mornings at 5 a.m. to 10 a.m. on IB Rock, part of the IB Network. See you there.
It gives clarity to problem solving. It increases production and focus on the job. It alleviates sleepless and restless nights and fends off stress and tension headaches. No, it's not the latest energy drink or health supplement. It's Legal Shield. Get peace of mind every day, every night, now and forever. Legal Shield. Get it.
To find out more about Legal Shield and how it can protect your family and your business, call Andrea at area code 719-243-5577. 719-243-3174. That's area code 719-243-3174. Legal Shield.
Programming produced by and for the Internet Broadcasting Network can be found on TuneIn. Be sure to take us with you by using the TuneIn app on all your mobile devices. This is the IB Network.
Final segment of the show. We're talking to Ethan Rector. He is an estate attorney with the law offices of Meggoblay. And now Ethan gets to turn the tables a little bit. Ethan gets to be the interviewer, put me on the hot seat. So, Ethan, fire when you're ready.
All right. We'll start with a question or a topic, I should say, that many younger families throughout the country are dealing with these days, and that's how to incorporate paying back student loan debt into their financial plan. Because I can speak personally in my case, I have significant student loan debt as a law school graduate, and it's tied in through the federal government. And the federal government has certain incentives that private student loan debt you might take out doesn't have. And so I guess the topic that I want you to address is how much should I be tackling this federal student loan debt? How much priority should I be putting on it when the payments on it are based on what my income is? So even if a couple of months I'm struggling for one reason or another, I'm not going to have to pay back as much on that.
Right, and that's a big differentiation to make, the difference between those federal student loans versus the private student loans, because the private student loans, you just get an amortization schedule and you're paying that back regardless of the income side. So if you're talking about the private side of the student loan, that's the one you want to tackle with really that laser focus and knock that out as quickly as you possibly can. The federal student loan, though, the one that is tied into your income, that's one of those things that as you go through and as your income increases, you can start building a little bit more intensity towards. But at the same time, understanding that if my income drops, it's actually okay because my repayment is tied to that. It's never going to be too big of a piece of the pie, if you will, if my income pie starts to shrink. However, still kind of in that vein, once that income starts to get a little bit larger, we start to get a little bit more traction over the course of our careers. One of those things we want to do is knock that debt down as fast as we can. And again, that's, when the amount of the income rises, we can tackle that a little bit more feverishly. But that's really the big difference there between the federal side versus the private side. That private loan, that's just like a credit card. You want to try to tackle that as quickly as you can, get that thing out of your life. On the federal side, that's one of those where, you can kind of let it stew a little bit until you've gotten to the point where you can go, you know what? Federal loan, private loan, doesn't matter. We're going to wipe that out in the next 12, 24, 48 months.
Okay. Well, that definitely helps out a lot. Kind of a segue off of that, one of the things that I'd like to do, and I'm sure many families out there like to do, would be able to pay for more of our children's education so
yes.
they're not in the position that we are. What are some of the tools out there that I can use? I know a lot of people are turning to 529 plans, and you can talk a little bit about that. But is the 529 plan the only solution the best solution when it comes to it? Is there a best solution when it comes to saving for college education?
Well, I'm going to give you the what I was told in going through graduate school. I'm going to give you the perfect graduate school answer, and that's it depends. There are actually a number of tools out there that can be used. A 529 is one of them. 529s are state-specific plans. However, you don't necessarily have to stick with your own state's 529 plan. You also have things like Coverdell ESA accounts. An ESA is an educational savings account. The big difference between the ESA and the 529 are the limits on how much you can put in each year. But the other big difference is a 529 is available for what they call higher education expenses. So that basically means anything post-secondary, technical school, community college, whatever. It's got to be post-secondary. And ESA is actually available for any educational expense throughout that child's career. So if you have someone who's going to a private school here in Colorado Springs, they could actually use their ESA to pay for the tuition on that sort of a thing. You also have other options with your kids. For my girls, I have UTMA accounts. UTMA stands for the Uniform Transfer to Minors Act. And basically what that is it's an account that is specifically for the child. You have a guardian listed on the account as someone who is responsible for what's going on in that account. But the dollars in there is no school designation on those. As long as it is used for what is deemed the best interest of the minor, then you can actually use those dollars in the account. So for me, I have both a 529 that my kids will use if they decide to go to college, but in particular for my girls, I have UTMA set up as well.
Okay. Let's talk a little bit about another topic that my wife and I went through recently in the last few years, and that's the risk management side of things. We were able to get life insurance on both of our lives to protect our children in the event both of us were to pass away. Well, first of all, to protect each other, because if I was to pass away, I want to make sure my wife has, I like to call it income replacement insurance, really, because it allows my wife to have the income that I would have made over the 20 or 30 years until I retired that she would have depended on. But it's for her, and then it's for the kids. There's different types of life insurance out there, though. Mm-hmm. There's term insurance, there's whole insurance, there's variable insurance. There's also convertible insurance that starts as term, and you can convert it to some form of permanent insurance. How do you determine which is the best way to go for a young family such as mine?
Well, that's a question that is not just about the young family. That's quite frankly a question for all of us. I'm not sure if you are aware of this or not, but I've studied some of the statistics, and roughly over the last 2,000 years, there's a 100% mortality rate on humans. That's one of the things I've discovered over that period of time. Now, back in my office, I actually have a picture hanging up above my desk, and on that picture is this phrase: if you don't know the purpose of a thing, you will probably misuse it. And nowhere is that more important than in that world of insurance. There's so many people who have misused their insurance policies simply because they didn't know why they had it. They didn't know the purpose of it. So the long answer to that short question is it depends. It depends on what your purpose is in there. If you're only looking at it to go, you know what, over the next 20 years, I think these are the expenses that are going to come up that we want to take care of in the event that either of us passes on, then term is probably a good thing. If you're looking at it to say, you know what, these are the things that I want to be able to do with it, and I want to make sure that there's an estate portion of this, then that whole life or that universal may be a good choice. And somewhere in the middle actually is that convertible side, right? That term insurance policy that you can convert to that whole life policy. So it's all going to depend on what your purpose is and why you really have the insurance. I actually sat with a lady probably 3 weeks ago now who was talking to another company, and they were trying to upsell the universal life because they said, you have got to have this, you've got to have it forever. And I sat down, and the first question I asked her was, well, what do you want it to do? And her response was, well, if in the next, 10 or 15 years that I pass on, I want my son to be able to finish out with his school. I said, okay, so you only need this for like 10, 15 years? Yeah. Then why in the world would you spend 10 times the amount for a whole life policy? Because all you want insured for is a specific term of time, hence the name term insurance. And we really walked through that purpose side. So it's a great question. It's a question a lot of folks have, and they never really answer that, what do I really want it to do? Because that's where you've got to start to figure out what policy is the best for me.
Well, I appreciate that you're able to explain that in that way. I always thought of term insurance. I've heard permanent insurance has a purpose for many people. And I've heard people, when they're talking about permanent insurance, always question, well, why are you throwing all the money that you're throwing towards your premium? Well, it's gone if you don't die. But it's the same thing with your homeowner's insurance and your car insurance.
Exactly,
If you don't get in a wreck or your house doesn't burn down, it's just protection. And that's why I looked at it from the income-based side. I think it does depend, as you say, on what the purpose is. But for young families such as myself, I think a term's going to, in most cases, play a huge part of it, for sure. One of the other types of insurance that I see a lot of clients lacking in what I do is disability insurance. And in some ways, I think even scarier than the thought of dying is the thought of being disabled without being able to bring in any income. Although you don't see as many people have that. Do you think that this is a product that is undersold or not looked at appropriately by many people?
Well, I think from the consumer side, I think it's something that we often A, overlook, and B, undervalue. You know, there are a lot of places where people may work that part of their benefit package is some sort of short-term disability insurance. And that's where they're thinking, you know what, if I get hurt and can't work for a month or 2 months, then I'll still get my income and that'll be fine. But the question I often ask folks is, well, what happens if when you got hurt and it wasn't that 2 months or 3 months or even 6 months you couldn't work? What if it was the rest of your life? Then what are you going to do? Because I guarantee you Social Security disability is not going to actually replace that income that you had. And I think there are a couple of pieces in that disability insurance world. One, there's the piece where people are kind of afraid to think about what happens if. You know, we're a lot more likely to go, well, what happens if I die? Well, you know, I know I'll be gone because, well, there are people that die all the time. But we don't like to think about that disability side. You know, what happens if, and I'll bring this one out, sort of that local feel, Amy Van Dyken, radio host. She was an Olympic athlete. She's out riding a quad with her husband. She hits the accelerator. I will guarantee you when Amy Van Dyken woke up that morning and knew they were going quad riding, she never thought about not being able to walk ever after that. And she had the accident, several fractured vertebrae, and right now she is paralyzed. You know, she cannot walk anymore. She was an Olympic swimmer who does not have function in half of her body. But nobody wakes up thinking, well, this might be the day that I lose the use of my legs. And I think that's a place where oftentimes people are afraid to go. And quite frankly, it's that fear of the unknown that keeps them from being covered with disability insurance. And it's absolutely something that most everybody's going to need in some way, shape, or form.
Okay. One other insurance piece, and this is the insurance piece that I probably ask my clients more about than anything else, especially with the cost of long-term care skyrocketing, almost equivalent
Yes.
with the cost of student education these days. But I'm always confused as to when is the appropriate time to start really consulting with an advisor regarding long-term care insurance. As an elder law attorney here in town, I talk to all my clients about Medicaid and what Medicaid really means for them, and how one of the ways that you can ensure that some of your estate is preserved is through a long-term care insurance plan. But is it appropriate to start thinking about it 35 or 40, or do you really recommend, because of the uncertainties at that point in time, pushing it off to, 55, 60, 65? But I do know that, 1 in 2 people, either you or your wife in all instances, is likely going to need some form of long-term care.
Yeah. And that's actually one of those pieces of a good overall plan, that regardless of your age, whether you're 50, whether you're 20, or somewhere in between, that you want to talk about that. And really you want to start thinking about that earlier, more so than later. But you also don't want to have to get too much in depth as you go through the end. Well, that's all the time we've got here today, folks. Thank you, Ethan, for joining us today. Ladies and gentlemen, we will see you again next week, or, at least you'll hear us anyway, on Dad CFO. thanks again for tuning in to the show. Remember, if you have a question that you'd like to have answered on air, you can tweet at us at Dad CFO, or you can also email us. That's dadcfo@ibnetwork.us. Don't forget to tell all your friends. You can also download the TuneIn app to follow us there, or you can find us online at ibnetwork.us. Again, that's I, the letter B, network.us. Take a look at our show as well as all of the other great shows that are on there as well.
Set a reminder for Tuesday mornings at 10 a.m. and join Rick Stevens for Dad CFO on the IB Network. Thank you for joining us.